Welcome to the Standard and Rich podcast, where finance meets fun. Join your hosts Danny Gallo and Jonathan Elkoubi as they navigate the complex world of finance with a touch of humor. Whether you're a seasoned investor or just starting out, this podcast has something for everyone.
Welcome back, everybody, to the Standard and Rich podcast, joined today by your host, Danny Gallo and Jonathan Elkoubi. So, Danny, how was your week this week?
I had a pretty good week in the market. There was a nice little rebound. How about you and one of your stocks I know reported this week, GRBK?
Yeah, GRBK actually did really well. They beat earnings. They beat estimates. But the stock didn't react so well. They had a record quarter for gross margin and a record quarter for revenue. Some reason the investor didn't like that, and the stock didn't react that well. But it's still up for the week, not much, just the 1%. I'm still bullish on the long-term company. What about you?
Yeah, I was pretty surprised on that GRBK earnings when I saw a record quarter and the diluted EPS of $1.82 and their backlogs and their gross margins being up. I'm like, that's a crazy quarter that it just had. And seeing the reaction in the post market, but then not seeing the reaction in the opening market the day after was pretty shocking. Me this week, I had Amazon that reported earnings, so they beat estimates of 0.83 EPS with a 0.98 number. They also had a revenue of 143.3 billion, beating the expectations of 142.6 billion. And I'm pretty sure the forecast came in as expected. But a lot of people were thinking that they were gonna probably pull a Meta and a Google and announce a dividend and a share buyback. I don't think that was the right strategy to do, and I'm glad that they didn't do it because they still have a lot of room to grow and to invest back into the company. So I'm very glad that they didn't do that, but the market reacted that way. You could see that after earnings they were up 2 or 3% after everything that they went through and everything that they announced. They're still up in the past 5 days, 4.28%. So I'm pretty happy. There was also Carvana. We spoke a bit about this week. You remember, like a year and a half ago, with the conversation we were having about Carvana?
Yes, actually, I brought it up to you a year and a half ago. I think it was $4.50 per share. I think it was around a $3 billion market cap. And I brought it up to you. I gave you the whole investment pitch, gave you my thesis, and I really thought I was going to buy it. And then you discouraged me, and I took your advice and I didn't buy it. I was like, they're not profitable. You know, I never
I'm
usually
like, they're
invest in
gonna
companies.
go bankrupt. Their model does not work. It's a shitty model. But looking at it back today, they turned things around. I'm pretty sure they fired the CEO. So they turned things around since then, having a killer quarter this year. If you would have bought that 18 months ago, you would have had practically a 4,000% return.
I think it's a 20x, 18x. Oh, that's if you bought at the bottom.
Yeah, that's if you bought at the bottom. Exactly.
Okay.
Yeah, so if you would have bought at the bottom, exactly, you would have returned like.
And what is the up and coming earnings this week looking like?
This week you had Lucid that reported yesterday, actually. Um, well, Monday. So yeah, they reported earnings. Their CEO is kind of a clown, to be honest. the way he was speaking about his own company, saying that they're the most high tech car company, and that's at their advantage. And their second advantage is that they have the Saudi crown fund that's backing them. Uh, Also, 30% of their sales in Q1 were to the Saudi government. They're just not working out. I'm pretty sure the Saudis just wanted to have their their hands in the electrical market, but that company, they lost, I think, $350,000 per car sold, and they're already selling their cars around that amount of money. So imagine they would have to sell each car for 600K.
Just to break even.
So I don't know. Yeah, to break even, they would have to sell every car for 600K. So they're lucky that they have the Saudis behind them. I don't know how long they're gonna want to sink their money into it. They seem to have unlimited amount of money with all those big soccer deals to bring people to their league in Saudi Arabia, with the big signings of Ronaldo in the past year and those other big soccer players for hundreds of millions of dollars, and the Live Golf tournament for hundreds of millions of dollars. It's like every new athlete was making in the hundreds of millions of dollars to sign for anything that's related to them. But good for
Yeah.
them. But yeah, that's it. Disney's reporting as well, I think tomorrow. On Tuesday, if I'm not wrong, there's going to be Uber and Lyft that are reporting this week as well. Um, yeah, that's about it. What are you looking
And
for this week?
On Monday, which is yesterday, Berkshire Hathaway actually reported, and they also had their annual meeting on Saturday. What do you think about what happened on the annual meeting?
It's pretty crazy. Pretty crazy the amount of money the amount of cash that they have. They reported $189 billion in cash
Record-breaking
from
cash.
yeah, exactly. And I think in Q4 they were at 150 billion in cash. So they generated another 30 billion in cash. They did sell 13% of their Apple
Stake.
stake. Yeah, exactly. Warren Buffett said it was for tax purposes, but I call that bullshit.
I agree
The
with you on
growth
that
has
one.
stagnated. The growth has stagnated. I swear, if they didn't announce a dividend increase of 0.25 and they didn't announce that 110 billion stock buyback program, that's a record breaking. They broke their own record. The last record was $90 billion. The stock would have not went up.
And you predicted that from
They,
last
yeah,
week, right? You said they were going to struggle
yeah.
in China.
I said they were gonna have trouble in China, so they were minus 8.1% year to year in China. I That's their gross revenue. I think their iPhone sales were down 15% in China, if I'm not mistaken. Just in general, even their iPhone sales have gone down in general in the whole
Worldwide,
market
10%.
worldwide. Yeah, exactly. So like I said, I don't think people are going for that new iPhone. If they do something spectacular, like they come out with, they have to do this. They have to get a better Siri. If they come out and Siri's like AI off the hook, you could speak to her, she could answer you super directly, like a chat GPT, but on your phone. I'm sure a lot of people are going to transition just to get that AI generated into their phone. What do you think?
I mean, doesn't Samsung have something like that? I mean, Google too, the Google
But
phone.
that's it. If their competitors are doing it, you should be doing it too.
Yeah.
Especially that LLMs are huge right now. And now there was news today about them creating their own AI chips.
Hmm.
So yeah, so Wall Street Journal came out and said Apple is developing AI chips for data centers, seeking edge in arms race. So I guess they're getting into the chip development as well. We'll see how that pans out. They've tried to venture out and do other things. They invested in
Electric
AI.
cars,
They've tried to invest in electric cars.
and it hasn't
So
panned
far,
out.
what they've invested in, it hasn't panned out. Now, tomorrow, if I'm not mistaken, tomorrow morning they have a unveil. What that unveil is going to be, I have no clue. I hope it's not just about a pen, but we shall see.
I mean, yeah, I think Apple's dropping. I think it's mostly a macro problem. I mean, they have so much of the market already, and people are having less and less disposable income available to them, and it's easy to just cut back, just not buy the newest iPhone. It's the easiest thing to come back. The people who are doing it over and over again are now slowing down and not buying them every year, and they'll maybe wait 2 years, 3 years to buy a new one. You know what I mean? So I think it's more of a macro problem, one it'll fix itself over time. But I think their growth is going to pick up once we get out of this little slump recession that we're in.
Yeah, it doesn't help that China as well has been facing a recession in itself. The Chinese consumer is not strong. You can see it across all the data. Every U.S. company in China is taking a beating. A lot of companies in China are just taking a beating as well. You had even Starbucks reported last week in their earnings the their sales in China plummeted 10%. That's another thing that I said 11%. Sorry, that we spoke about last week. The Starbucks is facing a lot of headwinds, and one of their headwinds is in China. They thought China was gonna give them more revenue, help them with their gross margins, help them with with them expanding same store sales, and it just hasn't panned out. So that went down 11% in China. It went down 3% in the US. They were expecting $9.13 billion in revenue. They hit 8.54, so that was pretty disappointing. Um, their their comp sales were down 4%. They were estimating 1.5, they were minus 4%. They were estimating plus 1.5%. So that was horrible. International comp sales were down 6%. They were estimating 1.4%. So that was horrible. Their EPS was 0.68. They were estimating 0.8. They've just been getting a beating these days.
I mean, yeah,
Starbucks,
the
even
stock the
their
stock got destroyed. It dropped to 72. Do you still think? Do you think at this price, at these lows, do you think it's a buy?
uh I don't like catching a falling knife. So I rather see that rebound in the stock, see the CEO do some moves to try to help the brand. Right now the CEO's just been being dragged in the dirt left and right. He went on the CNBC with Jim Cramer, and Jim Cramer went for 8 minutes just blasting the guy. The former CEO of Starbucks came out, I think it was today or yesterday, that they said they have a lot of headwinds in front of them. They really have to sit down and find a strategy. And instead of focusing in China, just like start focusing in the US and try to figure out what works and what doesn't.
I think this is a similar situation that happened to Netflix a couple years back. I don't know if you remember this, but they were getting hammered. The CEO, they had problems with that, and the stock dropped to like $160 per share. And Bill Ackman bought it, and then he sold it later, like the same like week, because it kept having bad earnings and bad reports. But now it's almost at like $600 a share. It's like a 3x from where it was. Do you think this could be another situation with Starbucks? Similar to Netflix?
Look, they have to stop the bleeding. So they have to have that one good quarter that could put them back into the map. Um, so that's what I think should happen. But like I told you, I'm not the type of guy that catches a falling knife. I rather see that quarter rebound, see the CEO talk about more things, uh, invest more time. Probably maybe we don't like cutting prices, but maybe cutting prices just a little bit might help them. Look, if revenue's going down, that's not good. And I thought the Bill Ackman still had its stake in Netflix.
Maybe he bought it back.
Yeah, I think so. Oh no, you're right. He did sell it in 2022
Yeah, he bought
for
it and sold it the
400
next week
million.
because investors were stressing him, and like he was investing in the stock as a short term, but he still said in the long term it was a good investment, but he just had a short term horizon for that investment. But he was right; it ended up
Yeah.
3xing in the long run.
Oh my God. So he lost 400 mil instead of making 2 bill.
Yeah,
It's crazy.
he should have
Rebound.
held.
Yeah. You have to have patience. Like I told you, I just want to see a little bit of a rebound. I don't mind the stock. We've been talking about it for a while. I've had it on my watch list forever, and I kept telling you once it's under 100, I really want it. No, it's once it's under 90. I wanted it under 90. So once it hit under 90, that's where it was going to get interesting. So I'm like, I looked at it at 90. And then when I saw it just go down through the 80s like it was nothing and back to the 70s, well, now it's like, if I'm not mistaken, it's 73
73, 72 around there.
around there. So I think it's necessary. It could touch 70. It could go back to 70. It's
So
one of
what do
the
you think? Under
resistance
70
level.
is a buy?
We'll see. Like I told you, it's at 72.90, yeah. So I want to see that rebound. I don't mind Starbucks. Starbucks has everybody knows the name. Everybody says I'm going to get Starbucks. You know what I mean?
Strong brand.
Uh, they have strong brand recognition. It's high margin type of business, so I'm always open to it. I just want to see a little bit of turnaround. Maybe it's a change in management again. Maybe that's not the good CEO. Maybe it's just economic data in China turning around. Maybe, I don't know, like I told you last time, there's a lot of headwinds, so they have to start tackling that problem and showing us what they could do to solve that problem. Like their PE ratio is at 20. So their PE, it used to be like at 34 when it was at 34, 35 when it was at 90.
Yeah, and they have a consistent or kind of slow growth. They're not growing too fast. Their 10-year CAGR is 9.2%, and their 10-year free cash flow growth is 7.6. But their 10-year EPS is 80%, which is really high. But that could be through buybacks and other reasons.
Yeah, but look at that drop, like in EPS. It went from 1 point, let's say, let's start Q2 2023. It went from 1 to 1.06 to down to 0.9 to down to 0.63. Like they're having a hard time. They really just have to turn the ship around. I don't know enough about the coffee business I know a lot about the restaurant business, but I'm not a fast food business type of guy. They need to attract customers. Maybe try to upsell something else to get their revenues going up. Maybe attract them with the coffee and try to
Sell some more
upsell
carrot
like
cakes.
muffins, granola bars, anything just to increase that revenue on the side. Because you could cut your margin a bit on the coffee and go get them on something else, and that'll equate it. You'll get a better revenue, and you'll get better same store sales.
I don't think cutting margins is the move here. I think they got to keep the quality because that's kind of their brand image, and they
No, but keep the quality, yes, for sure. You don't cut that. You can see with Tim Hortons, where we live, when they got acquired by restaurant brands, the quality just diminished so bad. I think it was their first, since they acquired Tim Hortons, I think this was their first positive revenue growth was last quarter. Since they acquired them, it hasn't been good.
downhill.
It's been downhill, yeah. Well, you could see the quality in their. Look, they never had the best coffee, but they had good coffee before. Not great, not garbage, but for the price you were paying, it was okay. Now, even for the price you're paying, you'd rather just go to worst case scenario, McDonald's, and you'll get actually a good coffee.
Wow.
Yeah, McDonald's really stepped up their game with the coffee.
That's a big downgrade. So,
Yeah.
are you ready for this week's stock battles?
Guys, don't forget to click the links below to sign up on Wealthsimple and Questrade to start investing. You will get a free $25 and $50 sign-up bonus with any deposit amount over $1. And also, don't forget to like and subscribe our podcast. I am always ready for our stock battle.
So let's just recap what happened last week.
So last week you used Trex, so you were up 4.07%. I had Kratos, and I was up 3.32%. So, Jonathan, you are now 3-0 for 1 week competitions. So we're doing it for the whole month, but so far you're
3-0, but aren't you beating me on week 2?
Yeah, so we go back to the week before, I had DraftKings, you had GRBK, so GRBK is up 3.5%, and DraftKings is up 5.6%. So it was a close race last week, and it was funny because we were texting all week about it. But you're demolishing me on the first week, so Exxon's the oil price hasn't popped as I thought it was. So Altria's up 6.6%. I'm down 1.4%. So you can start with as the champion. Let's give him a hand of applause, please.
Thank you. Okay,
As the weekly champ, you get to decide your stock.
So the score is 2-1. So my stock this week is a very famous insurance company. It's actually Progressive. So Progressive, my thesis on Progressive, ticker PGR, is basically, listen, so they have their model is the low-cost model. So instead of having agents like Allstate and State Farm, who have agents to sell their insurance, they just sell it through marketing, mostly through the phone. This actually enables them to lower their cost. So over time, this chips away at the bigger companies' market share, like Allstate and State Farm. They grew really fast. They have a big market share. But because of that, now their costs are very high. And now Progressive is able to take advantages. And Geico is actually one of Progressive's competitors, one of Warren Buffett's best investments. They basically have the same model as Progressive. So that's why I tried to copy Warren Buffett over here. But Progressive is better than Geico. They have invested in technology to get more accurate data, and they have beat Geico. They have a way higher market share than Geico. They have a 14% market share right now. And the only risk, basically, for this company in the long term is kind of self-driving cars and AI, artificial intelligence. This could be a big detriment to their cost of insurance will go down, obviously, because there's going to be less accidents and there's going to be less risk of accidents. So that's going to be a big hit, but I don't think it's coming in the next at least 10 years for mass adoption. So I think that it'll be profitable enough to yield enough cash flow for me to bring it back to the shareholders, and it'll grow enough to where it's not a problem. And the numbers are just great. If we just walk through the numbers real quick, they have basically 9.1 billion in free cash flow, 2.7 billion in net income. The price to free cash flow is almost 10. 10 price to free cash flow. You can't find that in many companies. That means 10 years they'll make their market cap in free cash flow. And their market cap is about 100 billion. Their 9-year revenue growth is about 12%. This is through the funding, the growth, how they cut costs, and through their marketing advertising. Their free cash flow growth, 21%, 9-year CAGR. So very fast growing company. 21% free cash flow is an insane rate. I do not expect this rate to continue in the future, but it doesn't need to continue. I'm happy with a 15% return growth rate. Even 12 is good for me, and it's still going to make for a great investment. What do you think about this, Danny?
Look, hey, that stock's been ripping since the beginning of the year. I think since Q1, so since January 1st. I think it's up 36%, and then the past year it's up around 60%. Look, it's a good company if it could compound like that, and you might get a little boost from tomorrow as well because they're doing their earnings call tomorrow. I have nothing to say against this company. Like you said, Warren Buffett praised this company pretty well, named it a very good competitor. So yeah, I saw the same comments that you did about the FSD driving. So Warren Buffett was pretty bullish on that. He said, if it's good for a company I own or if it's good for society, I'd rather it be good for society. So we'll see what happens with that. But I think it's still, I don't think it's a year. I think it's still a year or a few years away before FSD really becomes potable robo-taxi, decreasing accident rates out there. And because you talked about Warren Buffett, I am going to use BRKB as my stock pick this week.
Why not BRKA?
Not much. I reckon I rather the lower.
You can't afford the share
one,
price. Just say it.
It's not because of that. Because like, look at BRKB today, up 1.01%. Okay, but BRKA is up 0.96%. So why would I lose my 0.05% edge against you, Jonathan, when I need every single point to be on my side? Look, it's pretty easy. I'm going with Berkshire just because it beats the S&P 500 every year. It's going to beat Jonathan this week. That's my pick. Lock it in. 190 billion in cash. Just with the cash alone, you know what it'll do? I'll tell you right now what they'll do. They will.
What are they going to do?
Buy out Progressive and still have 70 billion in cash. That's what they'll do.
That took a while to calculate. So that's your whole thesis?
Like, yeah, I had to go see the market cap. Look, I've been looking at the Berkshire. I told you I wanted to buy it under 400. It's at 405. I think it's going to go to 440 in the short term. It hit it briefly, and then it went down when they said they had 150 billion in cash. Now they're at 190 billion in cash. Look, they're going to rake up that cash. They could put it in accounts. Man, they're making all kinds. They're just making all kinds. I can't bet against Buffett, so I'm gonna use Buffett on my side, try to win another round here. So that's my thesis.
Well, you're not doing so well so far. Hopefully this works out well. I think this is a good place to end it off. Any last final words you have to say?
Not really, honestly. It was a pretty good show. Good luck in earnings this week. I know I have a few plays that are coming out this week. If I'm not mistaken, I have WSP that's reporting earnings. I have Manulife that's reporting earnings. So I'll be and I have Kratos. Kratos They're reporting tomorrow night, so I can't wait to see their earnings. I'm very bullish on them. Like I said, I think they might be a great acquisition target. So from one of the big defense contractors out there. So we'll see what happens.
So, yeah, that'll be it for today's episode. Guys, be sure to leave a like, subscribe, and we do have a special offer link in our bio. The Questrade link is a $50 free. So, use the link to get $50 for free. And we have a Wealthsimple link for $20 free with no commission trades. If you guys are just starting out investing, be sure to use those two links in our bio for free money. Who's going to say no to free money? That'll be it for today. See you guys next time.
Before we go, a quick reminder. While we love discussing financial topics, we are not financial advisors. The information provided in this podcast is for educational and entertainment purposes only. Please consult with a qualified professional before making any financial decisions. Thanks for listening, and see you next time.